Hello and welcome to this Morningstar interview. I'm John Standring. I work closely with financial advisors and financial planners to communicate Morningstar's advisor offerings, including Morningstar Adviser Workstation. One of the financial planners that subscribes to Adviser Workstation is Steve Mclaughlin from Stiddard Financial Services, who joins me here today. Today Steve is going to share some insights into his firm, including their investment process, which excludes all performance and rankings in the initial filter. Steve, can you start by giving us a brief overview of your practice and an outline of your value proposition?
We started Mclaughlin Hook in 2005, and in November I merged my clients into a firm called Stiddard Financial Services. Prior to merging my clients, we looked after around 30 million of client assets under management. Our proposition was typically an up to 1% fee. We introduced a fee-based option in 2008. And to date, our clients have been very happy. We invest our clients in direct equities, exchange-traded funds, investment trusts, the more common OICs and unit trusts, and life assurance and offshore investment funds. Our main thing that we try to keep thematic through everything we do is we value our independence completely, all the way through from our start to finish. Our typical client would vary from 60,000 up to around 200,000.
What do you think is most unique and valuable about your service compared to other advisors?
We try to demonstrate a complete independence to our clients so that they completely understand where we are actually coming from, and that follows all the way through our business. For example, when it comes to our actual investment research, we use the Morningstar Adviser Workstation because we believe completely about independence. The Morningstar Adviser Workstation allows us to have the ability to basically change the way that we would normally necessarily research investment data. And in 2008 we decided to change the way that we actually research investment funds. We removed the more typical investment performance, we moved more typical quartile rankings, and we focused on the statistical data that sits behind all that wealth of information. Information prior to that wasn't necessarily as easily available and has become a lot more available more recently, so we try to use that information, which will allow us to be able to build a good structure and an audit trail behind what we actually do. So for example, we will typically use the modern portfolio theory statistics. We will look at the standard deviation, the alpha, the betas, the Sharpe ratios, the tracking errors, and all those kind of statistics that sit behind in investment funds and research. That will allow us to narrow down to a manageable list of investment funds using the Morningstar Workstation. Once we've actually got down to that list is then more manageable for us to then actually delve down into the actual investment performance and how they've performed against their peers or within a particular sector. So I think that is the part that we really have at the heart of what we do in order to be able to try and demonstrate to our clients, and we show our clients how we do it and how we end up from 20,000 OICs and unit trusts available in the market down to maybe a list of only 70.
Can you talk more about your clients, how you attract them and how you regularly communicate with them?
Our clients, where we actually have a fee agreement arrangement with our clients in place and we manage those clients' assets for them, we actually will produce a report every quarter for those clients, and we meet them at least annually depending on the size of the portfolio. We've obviously tried to use IT and technology where possible to be able to simplify the process of being able to deliver those reports for our clients. We built our reports around the Morningstar Adviser Workstation template so that we could, at the touch of a button, be able to produce these reports on a quarterly basis for our clients. We're currently looking at integrating their portal, the Morningstar Adviser Workstation portal, so clients can then actually receive these electronically, which will allow us also to be able to produce these reports on a more frequent basis. During the economic downturn of 2008, we took a bit of a decision, which was a bit of a logistical nightmare, to actually produce a valuation for our clients every 2 weeks. So we wrote to every client that we were managing a portfolio for every 2 weeks, giving them an update of where their current investment portfolio sat at. It was a pain for us, but actually we didn't lose any clients during that period, and so far we haven't lost any clients because they've still remained us during the current downturn in the investment markets. So we feel that client communication and keeping in touch with those clients is of utmost importance. If you can use the systems there to help improve that situation, that will obviously endeavour to improve your processes and the way you deliver that information to the clients. How we get our clients, mainly through client referrals from our existing clients or accountants and solicitors.
Finally, what advice would you give financial advisors that are changing their practice to a more client value, fee-based proposition?
Embrace the fee structure. Use technology where possible, and just look after your clients. Keep in touch with them. All the time we're in a good market, the clients don't really mind. Handhold the clients through the downward market and you'll look after those clients forever. But adjust your model, focus on getting a good fee-based proposition and structure in place. Use the IT like the Morningstar Adviser Workstation, demonstrate your independence, let the client know what they're paying you for and what you're doing to actually support them through the good and the bad times.
Steve, thank you very much for sharing insights into your firm with us here today.
Thank you, John, it's been a pleasure.